Mfani, good morning. I see you've joined us this week again.
Yeah, good morning. How are you today?
Doing very well, thanks. How's business been?
Oh, it's very quiet.
I can
We
only
hope
imagine.
for some.
I can only imagine. And Vinny and myself were just catching up while we were waiting for everybody to join this morning. It's one of the biggest challenges we've got right now when you've got a business model that depends on physical interaction and getting on site. And obviously with everything being closed down now, how do you still continue with your services or even find new clients for that matter?
Well, you just can't do it. It's very difficult.
Exactly. So are you guys trying to brainstorm any new solutions now whilst we're under lockdown that you hope to be bringing to market after this is all over? Or are you just pretty much waiting for the storm to blow over at the moment?
We are a few people that are busy brainstorming a little bit. But yeah, like I said, it's very quiet.
Excellent. Janine, morning. I see you've joined us as well. You are on mute though at the moment. I don't know whether that's on purpose.
Oh, yeah, Luan.
Morning, how are you?
Mute my microphone because he's away.
Yeah, so most of us with kids in the house are on permanent mute, and it's quite intentional. So unfortunately for me, that's not an option today. So if there is a little one behind me that screams or shouts, I apologize in advance. Janine, are we waiting for any more of your clients this morning, or are we all good to go, do you think? Shall we start, or is there anybody that we should wait for?
Just give me 1 second. I'm quickly going to check. Give me 1 second.
Excellent.
Morning, Luann. How are you?
Hey, Maud. Good morning. How are you?
I'm good, thank you. Sorry, I've decided to switch my video off and kind of mute everything because I've got children very active on the fiber connection. So at times I find if the camera is on, I lose the audio content. So I prefer to just sit in silence if you don't mind.
No,
but I'll butt in when I need to unmute.
You are very welcome to do so.
Thanks. So just on your questions now with regards to, to Fani specifically asking how you guys are doing and are you waiting to sit this out? I've been reading quite a bit and attended quite a few webinars in the US. And it's quite amazing how everybody has got different views on how things will unfold post all of this. But the one thing that is definite is that it is not going to be business as usual the moment that the lockdown is lifted, and that we are in for quite a bumpy ride between now and at least September, October. So if you haven't figured out how to innovate, and I think a lot of people haven't yet, now is going to be the time to innovate and figure out how you're going to do things differently. Because I think specifically in the sales engagement with customers, it is going to be a very different ball game.
Yeah, I think it touches, and more. Thank you for that. I think, obviously there might be some insights that you could share with us from your perspective on another call. I'm busy reaching out to a few people, especially now with most of the SARS and the UIF, relief programs being launched and all of that's running, and everybody's now started applying for that. Now we move into a different avenue of coping with this whole thing. And like you said, it's now a situation of how do I position my business not even post, so actually right now, because, we have to do a lot of groundwork now that we'll only see the fruits of our labor for a few months down the line. So I've been reaching out to a few people. It might be actually worth your while to get onto one of those from a sales perspective, because that's definitely something that you can bring to the table. So from a marketing, a sales, a delivery point of view, how do we restructure and how do we package, existing services that we've got? And I mean, we all do them fairly well. Otherwise, we wouldn't have done what we did, isn't it? It's now a situation of what do we need to change, or scrap completely and re-engineer for this new digital world, So I'm on your page, and I think one of the stuff I read over the weekend was how different clients will be interacting with our brands. It's not going to be the physical interaction that's going to be the paramount, I'd say, criteria for signing business, because everybody's getting onto this digital vehicle that's traveling 1,000,000 miles an hour, and I think it's you're either on it and you're along for the journey, or you're going to be left behind.
Absolutely. And not to hijack your webinar, but I think that the one thing that's been absolutely critical that's coming through, and I know there's a lot of people that love Simon Sinek, there's a lot of people that don't like Simon Sinek, but the one thing that's come through is that we must never forget that we are still dealing with human beings. People deal with people. And at the end of the day, if you go too digital, you are losing that ability to humanize and become authentic. So it's maintaining that balance. And then I know that a lot of the people that I've spoken to say, well, being, so it's polar opposites. How do you align the two? And I think therein lies it. There's never going to be one solution that fits everybody. But as you said, we need to be able to be adaptable and take nuggets in, use it, test it, change, and then move forward and keep what is needed, what works, and lose what don't work, and just keep on reinventing consistently. And for some, it becomes easier than for others. I know as a leader in our organization, I kind of think that the past 2 weeks I've almost done the do that over the head scenario because everything's just become so overwhelming, and you find people looking at you for guidance, and in a way you kind of like, well, what if I give the wrong guidance? So it's a very normal thing that we're all going through, is we don't quite know what we should know and what we shouldn't know, and you don't have that same sort of sense of confidence that you potentially had a month ago. But it's a very interesting topic for conversation.
Exactly, and I think to add to that, Maud, was you mentioned something that absolutely related with me just now. I'm busy writing the new article for our blog, hoping to go out later today. And I mentioned there, we all, like you said, absolutely no idea what works, what doesn't work. So we all end up slinging mud against the wall, and hoping something sticks, which is not a strategy at the moment, but it's the only strategy we've got. So just got to deal with it.
Yeah. Perfect. Okay, I'm going to mute because otherwise I'll carry on talking.
Me as well. Janine, are we good to go from your side?
Yes, 100%. We can go on.
All right, excellent. Umfani, I just want to mention that with you having attended last week's webinar as well, we're pretty much covering the same content today. As I mentioned in the closing part of that webinar, we are still waiting for the final pieces of legislation on the TARS, that Temporary Employer Relief Scheme, to be released. So I received an update last night via email that they're packaging the final components of that. So I'm hoping to have that webinar live in the early parts of next week. And all the attendees will obviously receive an email notification to that extent. So if this is something that you would like to revisit, obviously you are very welcome to stay on for commentary. But I won't take any offense, obviously, if you excuse yourself from this session. Guys, so let's get the... Umfani, are you there?
Yes, can you hear me? Yes, I listen. So okay, thanks, In, and I will connect or disconnect if I didn't learn anything new this time.
100%.
But definitely next week I will be on again, please.
Spot on. I'll make sure that the invite reaches you. Guys, so let's quickly start with the session, and thank you for everybody's valuable input so far. I think it just goes to show there's lots of conversation still to be had, once we've pretty much done with all the relief programs and all the legislative parts. So the topics we're covering during this session is everything from a SARS perspective. So this does not cover any UIF or any tax claims. Like I said, this is exclusively only to the different tax types that SARS has allowed us some relief. And we will be covering the employment tax incentive or ETI component of your monthly payroll. We'll be covering the pay-as-you-earn deferral. And then because provisional tax and income tax forms part of the same piece of legislation, we are covering that together. So our employee tax incentive, now I think with having just quickly looked at all the people on the call, we're all fairly familiar with employee tax incentives. That's just a rebate that SARS allows us on our monthly payroll, and it's designed as an incentive scheme for us to employ younger individuals and unskilled individuals specifically. So the incentive is there for us to upskill them within our organizations and then hopefully release them into market for them to be able to find better jobs once they've gone through that whole, let's say, call it an induction or even maybe a traineeship whilst working for us. So this incentive period that we are allowed to claim from SARS has now started on the 1st of April and will last until the 31st of July. And our existing benefits at the moment, the qualifying criteria for people within the scheme are any staff members between the ages of 18 and 29, and they must earn less than 6,500 Rand per month as a gross. So how the rebates are then calculated and distributed to us, the employers, it's calculated over a 2-year period. And in my first 12 months, I am permitted to claim back 1,000 Rand per month off of any individuals that qualify within those criteria. And then in my second year, that dips to 500 Rand per month. And then after the 2 years has been completed, my benefit then also falls away. So the proposed relief that SARS has now introduced is they've done that twofold. Number one on the qualifying criteria, but then number two also on the actual Rand value of any of those rebates. So what they've done is they said we are now allowing any individual over the age of 29 up to the age of 65 to now also be eligible, which obviously opens up the claim to pretty much our whole workforce on a monthly basis. And they've then said that my existing claim in year 1 on any qualifying individuals will increase from 1,000 Rand to 1,500 Rand per month. And then in the second 12 months, from 500 Rand to 1,000 Rand. So who qualifies? It's an important note. I had a few questions last week on this specifically as well. Any employer that has only now registered as a new employer after the 1st of March, in other words, in our 2021 tax year, will unfortunately not qualify for any of these reliefs. And the reality is that you have had to be a contributing taxpayer up until the end of Feb 2020 to now be eligible for a refund. And then, as with all the taxes at SARS, you'll see this as a bullet point on all the slides. You have to be an employer in good standing, and that means that you can't have any backdated returns that have not been filed, and you are also not eligible if you have any amounts still owed to SARS. So practical example, if we've got a resident company that has 10 employees earning 4,500 Rand per month each, in terms of this new proposal, there's an additional 500 Rand per month that this company can now claim back from SARS. So there's a 5,000 Rand per month up for grabs between April and July. And in this example, it's important to note that this resident employer does not only have 10 employees in this example. So there are additional employees that are actually above the PAYE threshold, and they have previously been submitting and paying pay-as-you-earn over to SARS on a monthly basis. So in that instance, the 5,000 Rand that we will be claiming from SARS is simply a deduction off of the net payroll amount that is normally payable. It's not a physical rebate that SARS puts back into our bank account. Our example number 2, however, is also a resident company, but only has 3 employees. So there's nobody else, working for the company, and these 3 individuals also only earn 4,500 Rand per month. So employee A currently is a qualifying individual, and we've been claiming ETI up to now. Employee B has exhausted their ETI claims as they are past the 2 years old, or the 2 years framework. And then employee C has been disqualified previously due to the fact that he or she was already over the age of 29. So with the new relief measures, employee A will continue to be able to claim, and previously they deducted 1,000 Rand per month. They can now do 1,500 Rand per month. Employee B was disqualified and there was nothing claimable. They are now allowed to add 500 Rand per month to their claim. And employee C now also falls within the framework of a permittable age. So their 0 claim has now also changed to 500. So in this instance, there's a 2,500 Rand per month up for grabs up until the end of July. Now, having said that, because they don't physically pay over any PAYE to SARS on a monthly basis, because all their staff earn less than the tax threshold, this is a physical claim that they need to lodge with SARS, and SARS physically needs to reimburse them for this. Now, under the old legislation, this only happened every 6 months, and SARS has now indicated that they will be reimbursing the employer on a monthly basis. An important fact to also note here is the fact that your ETI claim or potential ETI claim could be influenced by anything that you claim from the UIF office parallel to this relief. And why do I say that? Because your UIF claim is in the case where you physically can't pay your staff and you may have temporarily shut down your operations. So in this case, if your UIF claim is successful, the UIF office will actually be paying your staff directly and not to you as the employer, and you then in turn paying your staff. So in that instance, your payroll for the next 4 months may completely fall away. And obviously, if you don't have any payroll to submit to SARS, you can't be claiming any ETI. So there is one exception to the rule, and that is, and we'll be covering that next week when we've got the TARS legislation completed for that webinar, is that let's say that you have only partially closed down, or you have maybe slowed down operations. So you've agreed to send your staff home, but you continue to pay them, let's say 50% of their normal gross salaries. So in that instance, what will happen is you'll still have a partial payroll for that 50% that you keep paying them, and their UIF claims that they'll be lodging directly with the UIF office will then also be limited only to 50% of their normal gross salaries. So in that instance, your ETI claim will be prorated based on that 50% payroll that you'll still be submitting to SARS each month. So that gets us to employees tax, which is obviously the big one for most of us. Being consultancies, this is where the bulk of our expenditure sits each month. So this is also valid only from the 1st of April till the 31st of July. And you all know how this works. Our existing regulations requires from us as employers to run a formal payroll for our staff members, to deduct the relevant taxes such as PAYE and UIF, and then pay that over along with the respective return on or before the 7th of the following month. So the proposed relief measure is quite a big one in certain cases. So it allows us as the employers to now, between the period of April and August, to defer 20% of our gross PAYE payments due to SARS each month. So because we submit the returns on the 7th of the following month after we've closed off payroll, this means that it's for the returns from the 7th of May until the 7th of August. Now, the way that this works a little bit differently than the ETI is the relief measure that SARS allows you, so the 20% per month, will actually accumulate over 4 months and then will be divided by 6 to get an equal installment that will then be added to your existing payroll from the August return, which is submitted and paid on the 7th of September, up until the end of Jan next year, which is then submitted and paid by the 7th of Feb. So the illustration would quickly indicate what that would look like. So on my April to July returns, I had a total 20% deferral of 120,000 Rand that accumulated. So that equals a 20,000 Rand per month distribution when I divide that by 6. So, you know, my normal 80% payable, that is still an amount that actually has to be paid over to SARS on or before the normal deadline. So there's no relief measures on extensions of deadlines or late submission of returns. This is only applicable to the deferment of that 20% PAYE. So over and above your normal payroll that you'll be submitting during August up until the end of Jan next year, you'll be adding that 20,000 Rand per month. And by the end of Feb next year, when it's hopefully financial year end for the bulk of us on the call, you know, you've already paid over any of that deferment. So it's, I mentioned last week in the session as well, so the way that we've already started structuring the accounting records on our side is we've pretty much created a control account on the balance sheet, and you guys will start seeing that on your management accounts from the end of this month already. So any deferment that we now, put into this control account for the next 4 months will actually systematically disperse that onto the monthly payroll, so that on the management accounts we can keep proper track of where we are in terms of clearing that actual control account by the end of Feb next year, because SARS has also said that there's not going to be any penalties and interest on the deferred portion. But if you do not settle that full amount by the end of your Jan return next year, i.e. 7 Feb, then there will be late penalties and interest retrospectively applied. So they are allowing us the temporary relief, but we have to ensure that there's enough discipline within the company that we actually settle that debt by the end of Feb next year. So our income tax and provisional tax, like you all know, is exactly the same type of tax. Provisional tax is just a provisional assessment that we submit to SARS 6 months into our financial year. And then on the last day of our financial year, we have to do a second assessed calculation and then pay over any taxes based on that assessment to SARS. So here we've got a little bit of an extension and a bit more grace as far as the time frame goes. So this relief measure starts on the 1st of April this year, but it only ends on the 31st of March next year. So that automatically means that for the bulk of us on the call with a February year end, automatically that means that my first provisional tax return that is now due for submission in August automatically falls within the framework of this relief measure. And I'll show you guys in a few slides what that looks like. So our existing regulations, just as a quick recap. So like I mentioned, 6 months into your financial year, you actually have to do a calculation, and this is a pure estimate of what my annual taxable income based on that first 6 months would look like. And if there is any applicable taxes that would be due on that calculation, I have to submit and pay that over to SARS. In the case of a Feb year end company, I have to do that by the close of business 31st of August. And then a second calculation and also a submission is then required on the last day of my financial year. So in that scenario, it would be 28 Feb or 29 Feb like we just had. And that would then encapsulate a calculation for the full financial year. So SARS only allows us a 20% variance on that calculation before it starts imposing understatement penalties and interest. If there is an additional amount required to settle my annual tax obligation after I've submitted the first and the second return, I have to ensure that that is done within 6 months of my financial year with a third top-up payment. So, like I mentioned, there are certain penalties and interest that SARS levies. There's a 10% penalty the minute that I submit my return late and pay my taxes late. There's also the penalty for underpayment. In other words, I've underestimated my actual calculation. And then if there are any submissions that happened but the return hasn't been paid yet, there obviously will be there will be interest levied on a backdated basis on the unpaid portion of that tax. So the way that this is proposed for our, just want to minimize this quickly. So the way that they've proposed the relief for this new financial year is also on a deferral basis. And what will happen here is they work on a cumulative percentage basis of 65%. So in the previous scenario where I mentioned that 6 months into your financial year, you actually have to calculate and pay over 50% of your annual tax liability on that August return, and then catch up the additional 50% by the end of Feb next year. They have now reduced that 100% only to 65%. So how that would work is you need to submit and pay over 15% of your annual estimated tax liability on the first return, and then do an additional 50% on the second return, so that cumulatively you are now on the 65%. If you've got any deferred payments that have now resulted, in other words, that 35% that you've deferred, that has to be settled along with your third provisional tax payment within 7 months after your financial year end. Requirements, same as with our pay-as-you-earn. This is only applicable to tax compliant companies. In other words, there's no outstanding returns and there are no monies outstanding and due to SARS. The only exception there is if I've got any monies outstanding with SARS and there is an existing payment agreement and I've been honoring that agreement up to now, that'll still allow me to apply for the relief. But if I have any monies outstanding that I haven't entered into a payment agreement yet, or haven't been paid as such, that'll immediately disqualify me. And then it also is important to note on the income and provisional tax, this is only applicable to small business companies. And in terms of the law, that's defined as any business with an annual turnover not exceeding 50 million rand. So in this example, we've got a resident company with a financial year end of 30 June. And that automatically falls within the framework of this relief extension period. So because it's got a June year end, it means that 6 months ago, by the 31st of December 2019, it had to submit and pay its first 50% of its total tax liability for the year over to SARS. Now, in this case, we use the example of a 3 million tax liability. So by the end of December last year, it already paid over 1.5 million to SARS. So the second provisional tax return that's now due on the 30th of June will now enable the company to, remember, we're only working towards a 65% cumulative tax calculation here. So because it already paid 50% on the first return in December, it now only needs to do 15% on the remainder. So instead of paying another 1.5 million over to SARS now, it only needs to pay 450,000. So there's temporary relief right now of just over R1 million that the business can keep in its operational cash flow. So having said that any deferred taxes from this relief measure needs to be paid with the third provisional top-up run, which is 7 months after year end. We've already started engaging with a few clients here, and it's going to be quite important for us to do proper cash flow planning around this. And the reason why is your third payment needs to be done within 7 months after your year end. So in the case where you've got a Feb year end client, that third top-up payment has to be submitted and paid over to SARS by 30 September of the following year. But a month prior to that, you are already required to submit and pay over the first provisional tax return of the next financial year. So you might be in for a double whammy, literally 30 days apart. So if we don't build this into our cash flow and our budgets, we might actually get to a situation where we literally may have to choose either of the two returns to pay to SARS. Last thing we want to have happen is defer the 35% only in 6 months' time to realize that we're going to need that cash to actually pay the provisional tax for the next financial year, and then SARS goes and backdates underpayment penalties and backdated interest as well. So this is also something we're going to have to build into the management accounts from the end of this month also. So let's quickly use 2 practical examples here. So in this instance, company B has a Feb year end, and like I mentioned at the beginning of this slide, their first provisional tax return that's now due on the 31st of August will coincide with our relief period. And in this example, we estimate a total tax liability for the year of 800,000 Rand. So given again the fact we're working towards a cumulative 65%, this relief, excuse me, this relief legislation requires from us to submit 15% on the first return and additional 50% on the second return. So the 800,000 times 15% will only require from us to submit and pay 280,000 over, sorry, 120,000 over on this first August return, deferring the 280,000 in the example. And then by the second return, which is due Feb 2021, which is a month before this relief measure period ends, which means my second return is actually also within the framework, I'm then only required to submit and pay over an additional 50% of the 400,000. So there's a 280,000, which then represents 35% of the 800,000, which will be due by 30 September 2021. And now you can see, like I mentioned in the previous slide, the Feb year-end client will need to be paying his first return for the 2022 tax year by the 31st of August 2021, which is literally a month before we have to settle this deferred 280,000 as well. So that's why we advise our clients to build the deferred amounts into their cash flow planning for the next year at least. Important fact to remember here is that SARS has not made any extensions to deadlines for submission of returns or the payment of any of those returns that are not included in the deferred amounts. So there will be an extension, and the extension is interest-free and penalty-free as long as we clear those control accounts we mentioned a bit earlier within the extended timeframes, i.e. on pay-as-you-earn, before the 7th of Feb 2021. And depending on your year end, if you've got a June year end, like in the example, this would have to be settled by July 2021. And in the case of a Feb year end client, this will be needed to be settled by September 2021. Guys, so I'm going to open the floor for any questions that you guys may have on any of these relief measures, and then I'll be very happy to take those questions now. Okay, so if there is nobody with any questions, I will quickly then break the ice and maybe just quickly revisit a few of the questions we got over the last two sessions, and maybe there's conversation that stems from those. So the week before last, I actually put a smiley face next to the next to the comment, because there was a client that wanted to know, is this relief open to everyone, even though he doesn't actually pay SARS for his payroll on a monthly basis. So now, obviously we don't have to think about that one. There's no relief applicable if you're not paying SARS. So compliant company submitting and paying the respective taxes and returns each month will, per implication, qualify, and we can't claim anything back from SARS if we're not paying. The 20% deferral of the pay-as-you-earn. We had two comments last week of two clients commenting pretty much on the same topic. So they mentioned the fact that isn't there anything more that we can do and more that we can claim as far as the PAYE goes, because it seems to them like we are literally just kicking the bucket down the road, which in essence pretty much is. It's an eventuality that you will definitely have to pay the money over to SARS. I sat down yesterday with a management meeting and did the calculation for the clients. If they actually apply for the deferment of the 20% over the next couple of months, they are permitted to keep close to 700,000 in their market link account up until the end of Feb next year, which continues to earn interest, and that SARS allows us to pay back interest free. So, if you are a business that manages to keep your doors open and also adapt your business models and remain profitable over the next couple of months, even though, yes, it is an eventuality that we still have to pay the taxes over to SARS, it could actually help us on a cash flow basis to alleviate some pressures on other levels. So that was quite an interesting conversation we had on that topic. There was also a question from Jan. He's asking whether there are any relief measures applicable to individuals, which was a good question. In one of the very first slides, I actually made mention there that the way that SARS defines a business is not only restricted to a corporate entity only, it per implication also brings into the scope any self-employed individuals, in other words, a trading as, which means that any of the relief measures we've just discussed per implication would also be applicable to any self-employed individual in good standing with SARS as well. As far as a normal salaried individual goes, from a SARS perspective, there's not much relief because this is purely focused on the employer, and the employee obviously has his or her pay-as-you-earn already deducted by the employer. This is more so applicable to the UIF grants, where a staff member that is not earning at the moment because their employer is temporarily shut down, they are then permitted to go and claim from the UIF office specifically. And then also Natasha asked, what about employers employing foreign nationals? So, that in our current situation is something that's quite relevant. So there is no clarity yet as far as what those regulations and those relief measures would be. Between UIF and SARS, they are both working on that, and they also need to give us an update by the end of the month on that. So I'm hoping to have some information available for you guys when we launch our TARS webinar next week. And I think then there was also a question here from Yatish that asked, what will be required from us as the accountants and from you guys as the employers as far as the actual SARS submission goes. Now, that's obviously the question that's still up in the air. And the reason behind that is the SARS notice we received last week is they are working crazy hours to work on the back end of the SARS e-filing system, because you can imagine that every single relief measure that we've just discussed requires a specific return to be submitted, and all the existing returns at this stage needs to be rewritten and accommodating any input fields that we may have to enter from our side, such as the 20% deferral or any of the deferments on the provisional taxes. So we don't know yet. We actually have got no clue what those returns will look like once they get published, but they are under the pump because, in 2.5 weeks from now, we need to be submitting our first pay-as-you-earns from this relief period. So we will definitely keep you guys posted. I think I mentioned to most of the audience over the last 2 weeks as well, for those of you that haven't joined our closed Facebook group yet, it's a community on Facebook only for Calypso clients. So we're collaborating there and having nice discussions around these things. And we'll obviously keep posting our articles and our updates from all the government parastatals as they issue new updates. And that's a nice way for you guys to keep up to speed. But then we are also releasing some new webinars as content becomes available. So is there any questions that you guys may have over and above the ones that we've drawn from the previous 2 sessions now?
Hi, Luan. It's Maud.
Hey, Maud.
I think everything's. I'm sorry if you get left hanging there in the quiet. I think everything's quite self-explanatory, and I think probably I'm being a bit of a naysayer, but in typical SARS fashion, we're extending a half olive branch, not really a full olive branch. But I suppose it's more beneficial in organizations where there's bigger money that needs to be moved between, obviously obligations, but at the end of the day, you still need to pay it. There's no relief really. It's just a cash flow relief.
It's exactly that. It's exactly that, so the conversations I had on the Zoom calls over the last 2-3 weeks, literally every single conversation, whether it started with that question or ended with that question, is how do we get through the next couple of weeks or months from a cash flow perspective? So there is clients that are in the fortunate position of having cash in the bank and not really influence that much on the crisis at the moment. It's business as usual. So they see this probably as a lesser of a measure than the guys that are at this point in time really struggling. And if there's 10 Rand in the bank, there's 20 people screaming for the same 10 Rand. I think from a SARS perspective, what they're trying to do is allow us as the employers to make easier choices, so that we don't have to end up making silly choices right now and not pay critical suppliers or staff for that matter, because there's no cash in the bank. And that obviously includes us as well. As business owners, we're quite used to the fact that we're always standing in the back of the queue. Everybody gets their money and if there's anything left, then that's when we get paid. So, we're definitely part of that same conversation. And I think it ties in with the conversation from Jan and Yatish from last week as well. It's simply kicking the can down the road, for sure.
Yeah. Okay, perfect. Well, thank you from my side. I think I speak for myself and Vinny, it's really good to have this sort of backing and support. I think although a lot of this is not applicable to our business specifically in the sense that it wouldn't make a massive difference to us, we will, I've taken some notes of what you've mentioned, so we will play around with some numbers on our side, because at the end of the day, every little bit makes a massive difference in the end, because we still don't know what's going to happen in the next month or in the next 2 months. I really do appreciate the time you've taken to put this together, and apologies, I did accept last week's meeting. But between my blunders and technology, I had managed to double book myself for 2 calls at the same time. And the one was a client, so I had to obviously be on the call with the client.
No, right now it's business first, so no apologies needed.
For now, it's business first, yes, but I've already had a client hounding me for things during the call. So thank you so much. I really appreciate the effort you've gone through.
Massive pleasure, Maud. All the best.
Thank you.
Cheers. Bye-bye. Anybody else with any questions, or is that a sign that we are wrapping the session up?
Thanks, Luan. Thanks so much for this. I also have written a lot of notes down, and
Excellent.
I will discuss it with Maud, and we'll get back to you. You said there's another one next week. What is that one based on?
So there's a parallel process running next to the SARS relief programs that is ran by the UIF office, the Department of Labor. It's called TARS. So that stands for Temporary Employer Relief Scheme. So that's typically where you've got organizations right now that have either completely shut down or they are on 25 or 50% operational capacity due to this lockdown. So what's happening there is there's actually a mechanism through which employers can apply for relief with the Department of Labor specifically. I mentioned a bit earlier in the session that there's 2 channels at the moment. So the staff members can either go to UIF directly in the case where they are not working right now, or then this new TARS scheme. So there are a few final permutations that the guys are working on. We've got a rough idea what it's going to look like, but as soon as we've got the finality around that, I'll be sending out webinar invites by the end of this week, and I'm hoping to run that by next week Wednesday also. So you guys are definitely on on the list for that, should you wish to attend.
Okay, cool. Okay, thank you. Thank you.
All the best, Lenny. Speak soon.